Hey everyone, welcome back to Corporate Decoder. Today we're diving into Colgate PALMOLIVE's latest financial report. Get ready for some insights that might just make you question your toothpaste brand loyalty and maybe even consider investing in pet food. We're looking at the first quarter of 2025 ending in March. The big picture, it's a mixed bag. Sales are down, but they're trying to spin it positively. Let's see what's really going on. Okay. Let's cut to the chase. Earnings per share, a key measure of profitability, went up a tiny bit from $0.83 to $0.85. Not exactly a massive jump, but hey, it's something. This is like getting a $2 raise after working your tail off. Now, net sales, or the total revenue from selling stuff, tells a slightly different story. They went down from about $5.6 billion to $491 billion. That's a decrease, meaning they sold less stuff overall, numbers down. But what does it really mean? Cost of sales, what they pay to make the product, also went down. This can be good because it increases profits, but it does suggest they made less stuff. Interestingly, their selling, general and administrative expenses, essentially the cost of running the company and marketing, are down slightly. Maybe they're cutting back on advertising or streamlining operations. All of this shows up when we get to operating profit, which is a core profit metric, is slightly up. Not a huge jump though. It's like working hard and barely seeing your paycheck increase. Net income attributable to Colgate Palmolive Company is also slightly up. Just $7 million more. Keep in mind, we are talking about billions of dollars here. Now looking into the balance sheet. Their property, plant, and equipment net remain pretty flat, so it doesn't seem like there were any major changes. Goodwill, the intangible asset they get from acquisitions, is pretty flat. Nothing to see here. Long-term debt looks like it went slightly down. Checking out the cash flow statements, net income, including non-controlling interests, remains flat. Depreciation amortization seems to be about the same as the previous time period. Capital expenditures are also down a bit, so again, less big investments. Dividends paid is pretty much the same. This is how much money they give back to investors. Looks like they bought less of their own stocks to increase the price compared to last time. It makes sense since they had similar profit numbers. Cash and cash equivalents at the end of the period increased a little bit, which is a good thing, but not by much. They concluded some productivity initiative at the end of last year, which probably means laying off people. There were some changes in how shares were issued for stock options. All standard stuff. Checking inventories, the raw materials and supplies. Work in process and finished goods didn't change much. If it did, it would have meant that sales went really high or really low. Checking the earnings per share, the diluted earnings per share is very similar. There isn't anything special here in other comprehensive income. Moving on to retirement plans. A litigation matter caused some pension increase. Lots of legal issues going on, especially in Brazil with tax stuff from a long time ago. They have hundreds of talcum powder lawsuits. The company says it intends to challenge them, but this could become a big issue. They did win one case, but that may not mean anything. It may depend on what is happening in the legal system overall. There is this one ERISA matter that is causing headaches. It has to do with an old retirement plan. They've already lost, so they need to pay for it now, which should explain the pension liability we saw previously. So for reporting, they have two segments. There is oral, personal, and home care and pet nutrition. Check out their sales breakdown. Nearly half of their sales are from oral care, with pet nutrition making up almost a quarter. They sell a lot of toothpaste. Diving into the details, North America is down, Latin America is also down. But Europe and Asia Pacific are actually growing, a mixed bag across different regions. Now, to talk about liquidity and capital resources, there is this thing called supplier finance programs. This lets suppliers get paid sooner. There were no changes to risk factors mentioned in their previous report, so there may still be all of that going on. So, what's the overall picture? Well, Colgate Palmolive seems to be holding steady, but not exactly knocking it out of the park. They are facing a bunch of issues and had very little growth. The legal issues, especially with talcum powder, are a big cloud. The company is showing a slight drop in numbers. They were able to show increase in some areas, probably by shifting things around. We will see what next time brings. What do you think? Are you still loyal to Colgate, or are you looking at other options? Share your thoughts in the comments below. And if you enjoyed this breakdown, don't forget to like, subscribe, and hit that notification bell for more corporate deep dives.